Hey there, happy Sunday. Hopefully you're having a great weekend. I'm just going to go over some potential plays for next week and the overall what's been going on in the markets. Again, all these are really for educational only. Okay, don't take nothing as advice. So, pretty much, it's been a while since I've done one of these, and the main theme of this one is going to be what to do in, I would say, not a slow market, but in a market that's just, I would say, in a range right now. You know, everyone's all worried about what's going to happen next. No one knows nothing. That's one thing I want to show you and tell you is the key thing as a trader, okay, is you have to eliminate the noise. That gives you your best advantage in the long run. And I'm not saying to ignore people, no. You want to curate it to find out what you're best at, and find traders that are similar to you. But the overall markets, it's been kind of slow lately, and that's fine. You know, as I always say, slow days are the better ones because you can go out and study and do other things. But nevertheless, there's still going to be setups for sure. A 5-star setup was Eros this past Friday, which I did get long. It's pretty much the exact same pattern as I've been talking about on my channel all year long. You know, the big move basing on these moving averages and a range break. And again, we talked about building support and resistance. The more times this tries to break out and does not, it's still holding the trend, it's still proving the thesis. And that's pretty much what we got on Friday. And I got long. I pretty much long from 1650 average. Great swing. The market's kind of rallied back, and as you can see here on the intraday chart, it was a great trade. We'll see what happens on this one. It's a swing trade. Another one I'm long is S-Fly. S-Fly is another, the wrong one, this one here. S-Fly. Recent earnings, strong growth, revenue growth. Again, we talked about Soup's former run was going to run again. Back in 2020, this has gone, but ever since then, it's been pretty much neglected. But you want to go, always look back. You know, the best charts, the best movers often ran again. And it's back during COVID times, you know, this has gone on a run before. So again, focus on stocks that are linear. Focus on stocks that have gone, momentum in a sense. And this is really what you want to see. You know, I call it pretty much a delayed reaction. You have the first initial gap up. Pretty much it's been neglected for the past couple of years. You have a gap up, EP, and pretty much you wait for the second day. You wanted to build ranges, and that's what you got, the range break on the hourly chart. Range break. And I did get long. I was long initially on day one, but it shook me out. It's kind of annoying. I'm working on it. But I got long on day one of the move. Pretty much I got it, not after hours, I got it pretty much on this dip right here, 1027, but for some reason it shook me out. I saw it was weakness out of the open, and I was like, okay, I'm not gonna hold a stock that's not moving. But that's one thing I want to show you is don't just randomly sell. Don't do that, because don't let your emotions dictate your trading. Only sell whenever your thesis is invalid, and that's where having a system, setups come into play. You know, if you don't have a system, you don't have setups, and you're going to keep doing random nonsense. But you have to build a system upon your trading methodology, then that's how you do it, you know. But I recognized that this was still holding really well, and I pretty much got long again at $11. Risking, of course, this pretty much 1060 area, not low a day, because that'd be crazy. But yeah, those are two trades I'm in right now. Again, with this method, you know, with these range breaks, you really want to get in right as they break their ranges. And everyone's saying you don't want to buy a stock, as I always say, more than the average true range. So on this particular stock, hold up here, this thing's messing up. On this particular stock, the average true range is, let me see here. The average true range on this particular stock is $1.74. meaning that you don't want to buy it. Like, let's say the market was open right now. You don't want to buy it up here because it's already up already $2 and almost $3. You don't want to do that. You want to buy it on a dip. And we really didn't get a dip buying opportunity on this the entire time, but as it broke that range, I pretty much got it on this dip right here, and it went straight up. So it was a 5-star trade. Again, people always ask me, I saw some guy comment on Twitter, and there's not that many setups. I was going to talk about some things, the markets, because it's been bothering me lately. I don't see nothing. We're in the basing right now. The government shut down. Everything is just basing. But S-Fly and E-Rose are pretty much the ones I'm long. E-Rose is pretty much what I do over and over again. It's the hallmark of what I do in a sense. So I got this comment on my Twitter page, and I want to share this to you because it's very important. This guy said, how do you identify potential stock to buy? Do you choose from daily runners or use scanners with specific settings? It's both. It's pretty much both. And if you happen to watch this, it's pretty much both. But the way to identify stocks to buy is doing it from the night before. Looking at daily runners, like he just said. Yes. And I have ways of doing this. One is FinViz. I mean, you can use FinViz. It's free. Just look up big percent gainers. This is one thing I do probably once a month, if not twice a month. Biggest 6-month gainer scan, and it's pretty much going to show you the best stocks in the overall year. And this is what it takes. You know, as I always say, former runners can run again, and the best indicator of a potential runner is if it's ran in the past. You know, like for instance, BE. This one's still holding up really well. The ADR on this is extremely high. Again, we talk about basing. Look how well this is basing. Okay? Again, these ranges are setting up. Over 140. That is the pivot point. Over 140. I was long this from $70, you know? And this dip right here. But you have to focus on stocks that are linear. Again, linearity. Look how straight up this is. That's what you have to do. And you find this by just looking up the best stocks in the markets. Use FinViz, 6-month, half 20%. And there's a 422 charts on this, okay? But the stocks that are moving up, you know, they're going to create setups on them over and over again. That's how it works. It's the same stuff that happens all the time. There's nothing new. And one thing I want to point out is that whenever you have a market pullback, like it's not even a pullback, we're just in this little, the market's been shut down for a while, almost a month, okay? Again, the best time to swing trade or trade is when these moving averages are surfing higher. But now, when they're going to be declining, when they become resistance, that's when you have tougher opportunities. That's not saying you can't trade. It's just saying that it's a lot harder. But that's what made me want to buy E-Rose with big size. And the markets were not doing well, yet this stock was flagging. So the stock is trying to tell you something, you know? Same with S-Fly. The market weakness can't bring it down. The market is trying to tell you something. You know, you just have to listen. That's your job, is to listen to momentum. But this is the basic premise of the setup. The big move, pull back towards these moving averages. And you want it to get tight. The tighter it gets, the better. This is what I tell you. Tighter it gets, the better. Tighter it gets, the better. But yeah, just whoever that was, just it takes time getting to this level. But if you can see charts, pretty much like Lemonade. This is a recent earnings beat. This is a highly shorted stock. ADR is roughly 8%. This is going to be on the radar for next week. Because look left. This has gone before. Stocks move in stairs. It's the same thing. Run up, sideways. Run up, they have sideways. Run up, sideways, run up. It's the same thing. Okay? And it's setting up again. I'm not saying it's going to go to 100, but look how this, look, let's talk about wicks. The wicks are getting bought up here. So it's pretty much for next week, the same deal. Opening range is over $76 or $80. It's the same thing, you know. But it's gonna take time to see these patterns ahead of time. I mean, Hertz, for instance, it's still basing really well. I wouldn't be surprised. But yeah, just the main thing in this video lesson is just to focus on you and to focus on setups, and you have to study the past to understand what are good setups. Okay, most people just trade random shit. Don't be like random people. Okay. The chart in front of you is a setup. There's a specific criteria met. You have an entry point, you have an exit point, and you have a risk point. Okay? And it's not like the best stocks go straight up. And look at this shit. This one's straight up. This one's straight up. Okay? It's not choppy. It's a 5-star setup. But yeah. But I'm going to keep this one short because I'm tired and I want to do things, say, on a Sunday. But EROs and S-Fly, I am long. Again, just focus on you. That's all I can tell you. But yeah, I'll see you next time.